Mr. Maijoor, thank you so much for coming here. As you can see, there's quite a bit of interest in what's happening in Europe and an appreciation for how many of those decisions can impact the American marketplace, both the securities marketplace and the derivatives marketplace and the fintech marketplace. As a professor, I tend to look at your job as very interesting and at times a bit difficult. European member states are having their own differences of opinion from time to time on the treatment of different kinds of financial products and how they should go about viewing cryptocurrencies in particular. What would you view as the pillars, if one will, of the understanding of how to go about thinking through the application of EU law to cryptocurrencies? I know you've gone through a consultative report and a process where you're trying to analyze and assess how your different members are viewing cryptocurrencies and regulating them. Where do things stand at this moment?
Okay. Thank you very much, Chris, and very good to be here. And thank you very much for the invitation to be at Georgetown University. As you probably are aware, in Europe, obviously we're coming from a history with a large number of different financial markets. And basically there's been work in the EU in the past, going back to basically 40 years, trying to integrate these financial markets. And it goes back to the whole notion is that when you have scale, when you have bigger integrated capital markets, that ultimately that would be beneficial. And so across all areas where ESMA is active, obviously we're trying to be consistency and trying to improve cross-border financial transactions, financial market transactions. That is the key element we're trying to achieve. Going then specifically on to maybe, because that ties in probably most closest to the previous discussion, we are looking from a securities markets perspective to crypto assets. So there's also obviously a lot of interest, and the previous discussions there was a lot of the payments issues. We're more looking into that from a securities markets issue. And we have taken the position, and it was reflected in your comment on the advice, is that if it is a financial instrument, if it looks like a financial instrument, you should treat it like a financial instrument. And ultimately, that is a supervisory judgment. Although there are small differences across the member states, what is precisely a financial instrument, which is quite surprising to some extent if you look at it from a distance. If you want to integrate capital markets, at least you want to have the same a definition of what a financial instrument is, but by and large we have reasonably common definitions around that. Typically there needs to be transferability, there needs to be a profit right, and so what we have done is in the exercise in the area of crypto assets, we have asked basically our national regulators, here are 6 examples of crypto assets, would you qualify those as financial instruments, yes or no? And basically, depending on the type of crypto asset it was, whether it was utility type, whether it's payment type, or whether it's investment type, there was commonality on a number of them needing to be qualified and described as a financial instrument. That brings you to the logic that if it's like a financial instrument, you should regulate it like a financial instrument. That has far-reaching implications, because once you are a financial instrument, you are pulled in the whole regulatory world. So we're not only talking about possibly a prospectus, not only talking about clearing, we're talking about can it be used by asset managers, and so that is a big decision once it is a financial instrument. But we took the position, if it's a financial instrument, it has the same characteristics, it should be regulated and supervised like a financial instrument. So national supervisors are now moving in that direction. And so we know that now a number of them have been vetted under their national systems as a financial instrument, and so they are brought within the regulatory remit. I think the big question is, and maybe being a bit critical on the development, to what extent will it survive once it needs to meet the regulatory requirements? Or to frame it in a different way, to what extent was it successful because it was outside of the regulatory remit? By bringing it into the regulatory remit, cannot be, because some of the benefits might have been related precisely to avoid regulation.
Well, certainly in the United States, we have a very similar conversation going on. When you say financial instrument, we're thinking, is it a security or is it not a security? And obviously, if a financial instrument or a cryptocurrency is a security, then you're brought into the wonderful world of our colleagues across the street over at the Securities and Exchange Commission. But one of the things that we don't have, which I think the European position is by definition much more interesting, is that because it's a federal question entirely, both in terms of the enforcement and also, although I guess the state regulators can also get involved, but largely the definitional question comes from the U.S. Supreme Court jurisprudence. You don't have the same degree, perhaps, of jostling and competition in terms of building up local financial markets as perhaps in the European Union, where there's a real interest by some of the member states to enter early into this space and in financial innovation more generally in order to build up their financial centers. How is it, and what kind of guidance can ESMA play in helping to facilitate that, particularly in a world where you're also dealing with Brexit and the folks in the UK seeking to create their own financial centers?
Okay. So these are many different issues in one question. So first of all, generally, and for those of you who don't know ESMA that well, so we are a European body, and while day-to-day supervision is typically still at a national level, although for some areas it is at our level, so for example credit rating agencies and some benchmarks and also regarding CCPs who will get direct supervisory powers, and so, but the basic model in Europe is day-to-day supervision at a national level. But by entrance into one national market, you not only get entry to that financial market, you get entry to the whole of the 28, and that creates all kinds of incentive issues. To what extent does that national regulator not only take into account the benefits for that member state or the risk to that member state, but also takes into the wider implications for the whole of Europe? And so that is where basically ESMA comes in, is to make sure that those national supervisory and regulatory decisions are there to make sure that the whole European perspective is taken into account. To say it more bluntly, you can see that there might be some incentives to build a financial center without necessarily, if most of the customers and clients are somewhere else in Europe, not having sufficient focus on the risk that you might be creating, instead focus on the benefits that a strong financial center might bring in terms of developing more economic activity, etc. And so there is an important role for us to ensure consistency across the EU. Maybe first go back to the crypto asset issue, and then, because I think you also mentioned Brexit, if I listened carefully. So first on crypto assets. So once it is determined to be a financial instrument, we will try, and we have some instruments to make sure that the national regulators are as consistent as possible. Where we have seen some of the national financial centers trying to give a kind of a crypto asset flavor to their financial center and trying to get that label, the reality is that is only possible for those assets, crypto assets, which are which are not a financial instrument, and so there's more freedom there, because that is basically then for the national regulators to decide. But there we have advice to the European Commission to say, and to the EU political institutions, to say we need to have at least some risk warnings around those, and AML. There's been a lot already of discussions on AML, because that is an area where we see specific risks for crypto assets. Going to the Brexit issue, and I think there are so many things to be said about Brexit, but I think you focused on the issue around regulatory competition and how do we ensure consistency. One area where you can, so to prepare for Brexit, what is happening is that financial market participants are relocating from the UK to the EU 27, because they know that in the case of a no-deal Brexit, or in the longer term, when there's an orderly Brexit, is that there are problems in terms of the recognition of UK market participants. Having a license now in the UK is of course completely recognized across the EU. That will end for certain, certainly in the case of a no-deal Brexit. And so market participants are relocating from London to multiple financial centers. Interestingly, there's not one big winner. It's going to different centers. You can see Dublin getting extra activity, Luxembourg, Paris, Frankfurt, Amsterdam. There's some specialization, some focusing on asset management, some on trading venues. Where our interest is to make sure is that there's no regulatory competition, in the sense that these relocations, you can see the incentive to say, come over here to my financial center, you will get the license for your entry to Europe, but you can do it with a very little entity, with very little substance. And obviously that is where ESMA comes in, and we say, we need to make sure that we have common standards for receiving this business.
Well, this is a natural shift to a set of questions with clearinghouses. But before I get there, I did want to ask one question, which I find fascinating, and maybe you could help clarify. In the United States, there are some conversations, particularly on the Hill, about cryptocurrencies that are not necessarily regulated or deemed to be securities from a U.S. securities law perspective, but still are sort of in this in-between zone, and there's a sense that they should somehow be subject to some kind of enhanced disclosures or something of the like. But given just the way in which our regulatory process works, that kind of directive won't and couldn't come from the SEC, because it's not within their mandate and it's not within their authority. And it's not coming from the CFTC either, and CFTC Chairman Giancarlo has gone to the Hill to sort of ask for a bit more of that authority. To the extent to which, however, that lays within your authority to look at some of those crypto assets, I assume that approach, whenever completed in concert between ESMA and the Commission and perhaps Parliament, that would be for any such security within the bloc, and therefore it would be something that the rest of the world would have to think about in terms of the approach taken by Europe.
Yes. So, if I'm not sure whether I fully understand. So, first of all, if we make EU law, obviously, that is applicable all across.
I'm trying to
EU.
softly ask about extraterritoriality.
No, so okay. So, first of all, in the EU, all EU law is once it is a regulation or a directive, it applies across the EU, and when it's a directive, there are some this discretion how it's implemented, but it needs to be implemented. When it's a regulation, it is directly applicable. I think on the issue around what should we do for securities that are crypto assets that look or smell or is perceived by investors or retail investors like a financial instrument, like a investment, but in reality are, according to the legal definition, not. I think that is a very difficult area. Because on the one hand, we want to be careful to say, let's not legitimize it like a financial instrument. And so if you bring it into a kind of a bespoke regulatory regime, you want to be careful not to treat it like a full supervisory and regulatory framework. On the other hand, there's precisely the issue around there should be sufficient risk indicators, and to warn retail consumers around when they would buy this, although in reality it would not be a security. On the issue of, the extraterritoriality, of course, extraterritoriality has a bad name, but in reality, the flip side of this is a level playing field between, it is the flip side of having global markets and a level playing field. And so to explain that better, if you have an open EU capital market where you allow foreign marketplace to participate, which I think is completely right. You want to have markets where there's broad participation, but you want to have a level playing field between the EU market players and the ones coming from outside the EU, also participating in that capital market, providing services. That is a level playing field. Then what is the implication is that you would say, okay, you can provide your services in the EU. You can, we can talk about clearing. We can talk about, trading venues. We can talk about asset management, different areas. But you would basically say, if you provide services in the EU, that's fine coming from outside, but you need to live by the same rules for the EU clients. Obviously, it would not be around giving obligations for non-EU clients. But that, of course, is, in the popular term, seen as extraterritoriality, because it goes back to questions then outside the EU. If we want to provide those clients, that means, we have seen it with unbundling. Unbundling is the separation of execution and research in the case of research provided by brokers to their asset managers. We have asked for unbundling. The only thing we ask is that if there would be, for example, brokers from outside the EU providing services to EU asset managers, is to say it cannot be the case that as a non-EU provider and broker, you don't have to unbundle while the EU broker has to unbundle. You would say you need to do it. You need to live by those rules. But obviously that has raised the debate here in the US, which is still ongoing, on to what extent should that be a common model. And I think it's part of being a global market. It is an implication of having global markets and wanting to have a level playing field. And of course, the more different the rules are on a national or regional basis, the bigger this issue is. And therefore, it's so important to try to get at least international global standards, because the more you have them, the less there will be these kind of frictions.
Well, one of the most global industries is the clearing industry. And under your remit and authority lies this question of clearinghouses, which service customers from around the world, and trillions of dollars run through the world's clearinghouses. As you may know, CFTC Chairman Christopher Giancarlo has, or at least plans to provide for a CFTC vote relatively soon, a mutual recognition package for non-United States clearinghouses, but allowing in effect non-U.S. clearinghouses to operate in the United States to the extent to which they are deemed to be roughly equivalent or comparable to, or subject to regulatory regimes that are roughly comparable to that of the United States. But there is a condition attached, and that condition is that in order to enjoy this kind of recognition, it would have to be, in effect, mutual, and that the non-U.S. clearinghouse would have to be operating in a country that provides that kind of recognition to the United States. There's a lot in that question too. What is your sense? Where does the equivalence process stand now? And even before, if you wish, maybe it's useful just to walk people through what are you thinking through, and what are your priorities at this point in time when you are trying to operationalize equivalence in the in Europe as pertaining to non-EU counterpart CCPs.
Yes. So this is much talked about also today and yes. Yesterday. I was today at the CFTC at the AMRAC. And also had some other meetings at the CFTC. So I think it's important to have a bit of a history here. So Europe has had equivalence mechanisms already for a number of years. And while it is the implication of equivalence is that once equivalence is provided, is that the EU fully relies on the foreign regulator and the foreign regulatory system. And so when equivalence is declared, basically the EU says from those jurisdictions for this part of the market. So it's never equivalence across the board for the whole financial markets. It goes from credit rating agencies to clearing for trading venues, and they are slightly different. And so you need to look at it law by law what precisely equivalence means. But generally it means is that these foreign market participants can basically fully participate in the EU markets, while the EU fully relies on the local, the home country rules and home country supervision. Generally, that is a good system, but you should also realize is that ultimately it gets to the point is that as Europe, you have no tools at all, nothing, in such a situation to even say, I want to have more information on that market participants because they are very active in the EU. There might be certain risks, and I want to understand what those risks are. And if I have seen those risks, I want to want to address those risks, or maybe have a supervisory tool to respond to those risks. And so the equivalence system as we have had until very recently is a system where the ultimate consequence is full reliance. We're doing it in various areas, but you can understand, and we have made a point already before Brexit, that this is in some cases not the right model. In some cases you want to be sure that you can assess the specific risks that might be coming from outside the EU, from financial market participants from outside the EU, for the EU, because we're not sure whether that has the same priority in the, let's say, in the ranking for that regulator in the other country. And so we have started to change our thinking on that, and obviously our thinking has accelerated because of Brexit. We know that the UK will continue to be, for the foreseeable years, the most important financial market for the EU. Is it appropriate for a region you need to rely on a financial center? Your main financial center is outside of your region, but in addition to that, if you would take the consequence of the current equivalence system, you need to fully rely on the local regulators. They're very professional. We work very well with them, but also is it from an incentive standpoint the right mechanism to have? That is the reason that we said we need to change our equivalence systems, and so you can see that in various parts of EU law where this is changing. So it's not only changing for CCPs, but for example, it is also changing for investment firms. There are a large number of investment firms from outside the EU providing their services in the EU, and again, equivalence would mean here full reliance on the third country regulator. And so that is the reason we have said we need to change the system, but again, only when, in the case of CCP, it can be relevant from a systemic perspective. So only CCPs that might be relevant from a systemic perspective would be in the category where you would have additional supervisory tools. For those that are not in the category, that are not relevant from a systemic perspective, they would continue to have the possibility of full equivalence, full reliance. And also, even within the category where we would have certain supervisory tools and where the EU regulatory requirements would apply directly, there's the possibility of comparable compliance. And so you would rely there, but you need to make that assessment on a requirement by requirement basis, whether you can rely there on the home country regulation of that CCP.
Is there a sense in terms of the timing by which, or the order at which you're proceeding in terms of granting equivalence to those non-EU based CCPs? Is there a sense as to when that process will be fully completed in light of the timing created, if for no other reason, externally by Brexit or a potential departure from?
So first of all these equivalence decisions have been, we have already done a large number of equivalence decisions regarding countries outside the EU for CCPs. We currently have 34 third country CCPs recognized with ESMA, so they can fully participate in the EU market. The key step would be, of course, which will continue to be tier 1 CCPs and which would be eligible or need to be in the tier 2 category, where you would have the supervisory powers and the direct application of EU law. The process we are in, we have just published our consultation papers on key elements of this law, which is around the tiering and around the comparable compliance. So everybody can now react to those consultation papers. We plan to give our advice to the Commission by the end of this year. And then the Commission has a maximum of 1 year to implement those delegated acts or to decide on their delegated acts. And then after these delegated acts are there, the actual decision on tier 1, tier 2 will start after that. And so it depends a bit whether the Commission, so we expect that the formal law will be in the official journal by the end of this year. That will, from that moment on, the clock will start ticking for the delegated act, the relevant laws that are especially relevant for third country CCPs. The Commission need to decide on these within a year, but they could get quicker, if they can decide quicker, and then only after that we can start our process regarding tier 1, tier 2.
I know that there are going to be one or two questions for the audience. I did want to end with one question as we find folks, and feel free to raise your hand, is with the Capital Markets Union. Obviously, we've started off with cryptocurrencies, then we talked about clearinghouses, which are really the ultimate fintech in many ways. Are there any agenda items right now relating to fintech, to your knowledge, that are on the table when it comes to the development of the Capital Markets Union?
Well, I think so first of all, Europe is a financial system with a too large banking sector. We paid a high price for that also in the financial crisis. I think you can make the point that having a better balance between the banking system and the non-banking system is that you can make the financial system more stable. And you will understand that in these discussions, the US is frequently mentioned as the example where you have much more successful, the capital markets are much deeper and play a bigger role in the economy and the financial system. We should do that. We should push for that. Europe has been working on it for many decades already, and so I'm sure that the next European Commission will again work on that. I think where technology comes in is one area where we think there needs to be much more improvements is around cheaper distribution of products to retail consumers. More standardization, more robo-advice, more transparency on costs. We would hope that technology helps there to make sure that we get a better deal for the end consumer. Currently, as a consumer, we can see that in our day-to-day lives is that there's been the biggest progress, at least how I see it, is in the payments area, our banking apps, how we can do the payments so much easier in our family, how we can now get better deals in terms of when we are in the US and having a better rate for exchanging the US dollar against the euro. And so in the payments area, you can see, and personally I experienced it as a client, how much progress there's been there. I can really see that there's been so much benefit to the consumer. I think that is not as far yet in securities markets, but there I would hope that in terms of standardization of advice, making it more inclusive advice, which is available for also people with a smaller purse, and more transparency of financial products, that there, especially technology, can help. Other areas where, of course, we're working on is things like cloud issues. Supervisory issues are very important for us. Cybersecurity risks are important for us. We're working on that.
And that would be at the Capital Markets Union level?
Well, I think on the Capital Markets Union, especially, I think the distribution, cheaper distribution, more transparent distribution. We have seen in so many parts of our lives how services have improved because of technology. Securities markets have been lagging a bit there, and I think that is the area where I see the opportunity.
Fascinating. Are there any questions from our audience? This reminds me of my law school course. Afraid of the regulator to raise their hand. Excellent.
He saves it.
He does save it.
Yeah.
Hi, my name is Farzan Sibed. I'm a postdoctoral fellow at the Global Governance Center at the Graduate Institute in Geneva, Switzerland. I'm just wondering what thought ESMA has given in terms of developing regulations to assert European strategic autonomy in relations to U.S. sanctions, and particularly as it relates to the area of cryptocurrencies and what can be created there. Thank you.
On which area?
Strategic autonomy from U.S. sanctions and U.S. regulations.
Well, I think probably I would not be. This is not the, let's say, the typical area of a securities markets regulator. And so I'm getting into territory where I do it more basically as a reader of newspapers than with the expertise knowledge. But we know, but just to convey that message, we know that there are discussions around, one of the implications of sanctions and the effectiveness also is very much related to the role of the currency that it plays in global trade. And we very much know that the US dollar has been much more successful in that respect than the euro. I think what is interesting there, I think so far the formal position has been from most of the central bankers that I know is that they are say, whether the euro would be, let's say, a global currency that is used in trade. If we're neutral vis-a-vis that position, you can see, at least I've seen some signals that you can see that is changing by some of the central banking, some in the central banking community.
And certainly when it comes to the AML issues, one thing that I noticed just reading the earlier consultative reports is that from ESMA and from the EBA is that there does seem, and it's not the same thing as sanctions, but on the AML end, a conversation that we had just in the preceding panel, that there does seem to be a lot of energy and work towards pushing through a very unified approach and an upgraded approach towards any AML-related issues, both in Europe and globally.
One other part of the coin, I know that there's been, and maybe that's the other part of your question. So we know that there's been sanctions against certain countries, outside of the EU. If you're talking about sanctions by, let's say, regulators from the US vis-a-vis European financial market participants, in principle, I think that is part of a system where you, without going into individual cases and whether they are right or wrong in individual cases, but I think the consequence of global capital markets where you have supervision at a national or regional level is, and if there would be a foreign market participant active in the EU and they would they would not live by the EU rules, I think it is right to be sanctioned in that case. And so maybe that is the other part of your question or the issue you're referring to. But in principle, I think that is a possibility that is related to the fact that you have global capital markets, that if you provide services cross-border, there is indeed the possibility that if those services are provided cross-border, but they don't meet the relevant rules and regulations in that country, is that you can be sanctioned.
Given the cross-border, and this is a way to maybe perhaps tie up the earlier panel with this one, from ESMA's perspective, when you hear about companies like Facebook or JP Morgan and other companies, big tech entering into the space, do you have any thoughts, observations? Does this percolate to your to-do list when you see these companies themselves thinking about creating alternative, or I shouldn't say alternative, but creating virtual currencies that obviously are going to be, in the case of Facebook, potentially used all over the world and within the European Union?
Well, obviously, as far as my understanding so far, this is more in and you call it also a currency, and so it would be more for the banking regulators to work on that. But obviously, on ICOs, on crypto assets with an investment characteristic, on these things we talk. We talk globally, we talk to each other, in IOSCO, we inform each other about our experiences. This is an area where, as a regulator, you need to be humble, you need to be, you try to understand these new developments. And so there is a global regulatory community thinking about these issues. We know that the FSB is involved into analyzing crypto assets, and I think that is only logical. Typically, these new developments, you need all the brain power and the expertise to address those issues. And so, obviously, talking about these issues on a global basis among regulators is very important.
And with the public. Thank you so very much for your time. It's been immensely useful for the Washington community.
Thank you very much.
Thank you, sir.